Good morning, everyone. My name is Yosua Lee. You may call me Joshua, and today I'll be presenting about the AASB 107, which is essentially the statement of cash flow. And these are the contents that will be presented in the presentation. So we'll start off with the introduction, its purpose, the historical development, and its application, with some examples at the end. So let's start off with the question, what is a statement of cash flow? A statement of cash flow is a part of a financial statement. It provides an information of an entity's inflows and outflows of its cash movement. It indicates how money circulated in and out of the business. It also allows the users of the financial statement, such as investors, creditors, and other users, to forecast and determine the surplus or deficit of an entity to predict their current and future performance. And what is its purpose and use? The purpose of the statement is to find out whether an entity is having a cash surplus or a deficit. According to paragraph 6 AASB 107, the information presented in the financial statement are defined and divided into three classifications of activities, which is the operation activities, financing activities, and investing activities. So what is the operating activities? The principal revenue producing activities of the entity and other activities that are not investing or financing activities. And what is a financing activities? It is essentially the acquisition and disposal of long-term assets and other investments not included in cash equivalents. And investing activities are activities that result in changes in the size and composition of the contributed equity and borrowings of the entity. So these are the benefits from the information out of statement of cash flow. So the statement of cash, its information can help us predict the future cash flow, also evaluate the changes in net assets, and assess the ability to generate cash and cash equivalents, comparing cash flows with other entities, recording historical cash flow, examining the relationship between profitability and cash flow. So what is a cash and cash equivalent? So cash comprises cash on hand and demand deposits. Cash equivalents is a short-term, highly liquid investments that are readily convertible to known amounts of cash, and which are subject to an insignificant risk of changes in value. So I'll be talking about the historical development of the statement of cash flow now. In the 1970s, the statement of cash flows was called the statement of changes in financial position, or the fund statement. The concept itself or required format of this statement were not specified, and hence it was not granted a great emphasis among the firms, withstanding its one of the primary financial statement out of the three to be incorporated into annual reports at that time. However, there are, of course, popular concepts such as the cash or working capital can be seen as a type of fund statement. Most of the odd methods of the financial statement that the analysts use to evaluate an organization's health or an entity's health is the figures from the EBITDA or the EBITDA. And the monthly cash flow statement also developed throughout the years, which is a method of preparing a monthly cash flow statement that came into place because most of the operating expenses, such as wages and rent, are usually paid up monthly. So it's good to keep track of those monthly expenses in an accurate sense or manner. There are also liquidity issues and new cash flow models. So Arthur states that focus on the difference between profit and operating cash flow, OCF, could be early evidence of solvency or liquidity issues. From the evidence information of the profit in OCF, it maps out the changes in expenses and incomes. Thus, it helps the analyst to do the earning prediction and the evaluation of the firm's financial position. And who does this AASB 107 applies to? The Australian Accounting Standards Board made the accounting standard AASB 107 a statement of cash flow under section of 334 of the Corporation Act 2001 on 7 August of 2015, and that the entities are required to comply with the standard. And it illustrates that the Australian equivalent standard is the AASB 107, which is essentially the statement of cash flow. It's applicable for annual reporting periods since 1st January of 2005. In addition to that, there's also a requirement that needs to be disclosed, especially for nonprofit entities that use the direct method, and it is compulsory to highlight the total net cost of services in the statement of comprehensive income in a complete set of financial statements. There are two tiers of reporting requirements. The first tier is the Australian Accounting Standards, incorporates the IFRS issued by the IASB, the IASB International Accounting Standard Board, and the requirements which are particular to the Australian entities. And the second tier is the Australian Accounting Standards, comprises of measurement and recognition requirements related to Tier 1. However, the non-profit private sector entities may also have to follow and comply with the same Tier 1 requirements. So what is the special purpose financial statements? Deloitte also mentioned that it is considered to be essential for those non-reporting entities to prepare the special purpose financial statements to the external parties, as it is required to have complied with the accounting standards and interpretations. The general purpose financial statements are more likely to be made for users who are not in a position to require an entity to prepare financial reports to their special information needs. So in conclusion, the major objectives of AASB of the statement of cash flow is to help the users, such as creditors, investors, and other users, to classify and evaluate the entity's cash flow activities during the period from investing, operating, and financing activities. It also allows users to understand the insight of an entity's financial activities, but it also has the ability to assess the entity's information on how they generate their future or their current cash and cash equivalent. It also provides the external parties to understand the needs of the entity, as well as how the entity allocates its resources, while separate information included in the statement, such as figures for the cash flows from operating activities, also provide them with any concerning variations in cash or other liquid cash equivalents. And lastly, it also helps the external parties to make an economical decision promptly, as well as to find out the company's financial situation and simultaneously contribute to enhancing the analysis of a company's financial statements. And these are the examples. I will show you the examples of the operating activities, financing, and investing activities. So we'll start with the operating activities. True to its name, the principal revenue producing activity. So as we can see, receipts from customers, for customers, which is the income, payments to suppliers, employees, which is the COGS, the cost of goods sold, and the certain components that we will add up, and we'll get the net cash from operating activities as the net total out of the operating activities. And secondly, we have the financing activities, which is the acquisition of and disposal of long-term assets and other investments not included in cash equivalents. So as you can see, purchase of plant and purchase of land is considered as an acquisition, so we can include that as part of a financing activities. And we have also lastly the investing activities. So it comprises of activities such as dividend paying or proceeds from borrowings or loaned or something like that. And we will add those up. After we add those up, we will get the net increase in cash and cash equivalent, and we will add that up. It's either net increase or net decrease in cash and cash equivalents at the end of the year. And we will add up the cash and cash equivalent beginning of the year, and we will get the cash and cash equivalent at the end of the year. And as we can see, the 36,000 is the total surplus we have of an entity at the end of the year. And that figure will come up as the cash and cash equivalent beginning of the year for the next financial reporting period. Yeah. Thank you very much for listening to me today. I hope you understand